Hello, everybody, and welcome to problem 9-8. Here we've got the records for the clothing departments of Sharapova's discount stores are summarized for the month of January. So when we're going through and doing the retail method, what we're going to go through and do first is we're going to basically come up with our cost to retail ratio, which will be including markups but not markdowns. So let's go through and take a look at this. So our beginning inventory was, and we'll do a cost and then retail. So this had a cost of 17,000, retail of 25,000. The purchases was 82,500 for the cost, 137,000 for retail. Freight in, this is a cost of our inventory, so it's going to be included here in the cost, but it doesn't have a retail component. Purchase returns, this is going to be a reduction in our inventory cost of 2,300, and at retail it's 3,000. So our transfers in, meaning inventory that's coming into us, 9,200, and then 13,000. So we're also going to have over here net markups. We're going to include those in our ratio here. So when I add up my cost, I get 113,400. I add up my retail values, I get 180,000. So this was really over here, this is like my goods available for sale, right? So this is what it was over here at retail. Now what we're going to do is we're going to go through and subtract out some other items to figure out what is our ending inventory at retail. And then what we can do is we can come up with our cost to retail ratio. Our cost to retail ratio is going to be, and this is what we call the conventional retail method, which is going to be the goods at cost, and then the retail, including markups. And this here is going to be 180,000, or roughly 63%. So over here, we're then going to do less markdowns. So our markdowns here were 4,000, less sales revenue. Our sales revenue was 95,000. We had sales returns. We're going to add those back because those are coming back to us for 2,400, and those will be at retail. And then we also add inventory losses due to normal breakage. So inventory losses at retail. And this is going to be a subtraction of 400. Okay, so our ending inventory at retail is going to be 180 less 4,000 less our sales revenue. But we're going to add back our sales returns, and then we're going to deduct our inventory losses at retail. So our compute the inventory at retail prices. So it'd be 83,000. Compute the ending inventory using lower of average cost or market. So what we would do here, we would take our ending inventory at retail of 83,400. We then multiply this by the cost to retail ratio of 63%. And then we would get ending inventory at lower of cost or market of 52,290. So that is our exercise, our problem 9-8. And I look forward to seeing all of you on the next video. Have a great one.